Tell me, what is one of the biggest mistake that people make when buying a term insurance plan? If at the age of 70 my dependents, are still dependent on me,
right,
maybe there's a problem.
And cost of living has to be accounted for, because look, if something costs 100 rupees today, I can't buy it next year for 100 rupees.
So basically you're saying if I take that money that I receive from the term insurance plan, simply chuck it in a fixed deposit, the returns and the principal should enable my dependents to live until the age, for another 20-30 years. Hello people, once again, welcome to Ditto Insurance. Today we are going to be talking about another important topic. Now I know most people watching this video already know the importance of a term insurance plan. If you do not have a term insurance plan, please consider buying one. But before you do that, make sure that you know everything that you should not do while buying a term insurance plan. So today I have with me Sushant, who's one of our top term advisors in the company. And we will be talking to him about some of the common mistakes that people do while buying a term insurance policy. So let me get straight to it, Sushant. Tell me, what is one of the biggest mistake that people make when buying a term insurance plan?
Right. So we'll begin with an easy one. I think choosing a wrong duration of your policy is a good place to start.
Right.
Because I think that's one of the first things you have to do, right? When you buy a term insurance, selecting the term of your term plan.
So basically you're saying if I'm 30 right now and I want coverage until 65, my term will be 65 minus 30, which is 35.
30 years,
right?
30 years, 35 years.
35 years.
So yes, that's essentially what the duration means. Now here, most companies will allow you to go till the age of 85.
Correct.
And most customers actually get a bit attracted to this option, right?
Yeah.
Their point of view logic is, look, this is a life insurance.
Correct.
By 85, something will happen to my life.
Right.
Therefore, my family will get the money.
Right.
They're trying to kind of make it a money back policy, essentially.
Yeah, but basically that makes sense, no? Like if I'm consistently paying until the age of 60, 65, 70, 75, 80, I might as well get that money. My family might as well get that money. So why shouldn't I buy till 80, 85?
Right. So one, I think you have to think of it from the insurer's point of view, right? The insurance company is also trying to run a successful business.
Right.
Now, they're not going to collect 10, 20, 30,000 per year from you and give you 1 crore at the end of it, right? They're not going to do this free of cost. It won't work out for them financially.
Right.
So the first thing they do when you buy till 85 is they shoot up your premiums drastically,
right?
Because they realize the life expectancy probabilities have now changed. Two, there's still no guarantee, right? While 85 has a high probability of not surviving until then, let's say by the time we turn 85 with medical advancements, with the kind of treatments available, maybe the life expectancy increases in the future. And it has been increasing over the last few decades.
Right.
And lastly, look, you might think you're leaving 1 crore for your dependents. But what's the value of 1 crore 50 years from now?
Right.
Do you really think they'd be grateful that, hey, he left us some money?
I mean, inflation would eat most of it.
Would eat most of it, absolutely correct.
Right.
So for that reason, it really doesn't make sense.
So you're basically saying that if I buy the term insurance plan, then I should do it until perhaps 60, 65 when my dependents may actually need the money.
Absolutely.
Right? Because after retirement, I mean, if at the age of 70, my dependents, are still dependent on me, maybe there's a problem, right?
Yeah. That's correct.
Right.
Two, I think, look at insurance as an expense and not as an investment, right? You have to understand that you spend on insurance for peace of mind. Get your peace of mind until 60, 65. Your dependents are now independent and usually shouldn't be spending more on this.
Got it.
Plus, anything that you don't spend on this, you've now saved and invested for yourself.
Right.
And that's what you leave behind. That's what helps you after you turn 60,
basically
65.
you save some money as well instead of simply paying these exorbitant premiums.
With no guarantee of any return. Whereas I could put that money in SIP or into an FD or anything.
Right. Makes sense.
That's where I would have some advantage.
Got it. So duration is one thing that people should be concerned about when buying a term insurance plan. But what are the other things that people should look at when buying a term insurance policy?
Right. So I think the next one we can discuss would be the cover amount, right? How much are you insuring yourself for?
Right.
Now here you want to be careful with not under-insuring yourself or over-insuring yourself either.
Got it.
Under-insuring yourself would mean that when your family actually needs the money, they're not financially as secured as you would have wanted them to be, right? They're not able to fulfill all the obligations that you had planned for them.
Got it.
And over-insuring yourself means you're just spending more money into this, right? You're pumping in a lot more money than actually needed.
Right.
So there's really no sense there.
Right.
Now here, how it works with choosing your cover amount, right? The entire industry operates in a very similar fashion. They give you a multiplier which is decided based on your age, your education, your income, and the age brackets that you fall in, basically. So it's a multiplier of your income.
So give me an example.
somebody aged between 18 and 35
Right.
can buy 25 times of their annual income.
Right. So if their annual income is 10 lakhs, you're saying I can buy a cover of up till 2.5
2.5 crores.
Got it,
Absolutely.
got
And this is not just with one insurance company.
Right.
This is across all life insurance companies.
Got
You
it.
can hold a sum total of this much.
Got it.
Now, in fact, most agents would pitch you straight away saying, why don't you buy the maximum?
Right.
Trying to sort of get maybe a higher
Right.
commission for themselves. But I think where Ditto really stands out is we've gone to the extent of considering or, building our own NPV calculator. So what we do is we take the expenses that you're giving to your dependents.
Right.
Because at the end of the day, should something happen, that's what your family actually needs.
Right.
We set that as the benchmark as
Right.
per today's cost of living
Right.
and to the standard of living that you've set for them.
Right.
A family of 3 could live very comfortably in 30,000,
Correct.
but a family of 3 could also need 2 lakhs to live comfortably in a month.
Right.
Standard of living is what we call
Right.
it. And cost of living has to be accounted for because look, if something costs 100 rupees today, I can't buy it next year for
Correct.
100 rupees.
Correct. So
I have to account for a basic CPI index
Inflation.
inflation.
Right.
Absolutely.
Yeah.
So that's the first thing we've done,
Yeah.
where we set a benchmark and we inflate that number for the entire tenure.
So if there's a person who's eligible for say 3 crores worth of term plan, you're basically saying if my standard of living costs, right now my expenses only tally up to about say 50,000 versus 2 lakhs, then they should need 2 covers, even though
should
they
need
may
2
be
covers.
eligible.
Absolutely.
Correct.
They might be eligible for the same, but their obligations are different, their liabilities are different. Why
Agreed.
should they get the same recommendation?
Agree.
So we have factored that in. We've also looked at some returns as well. Should something happen and your family actually gets the money, why not put that money into like a fixed deposit in the bank, right? It's something our dependents can do. Be it our parents or our spouse, while they might not be the most financially educated, they could at least still get some basic returns from a fixed deposit.
Right.
So that helps them sustain for a longer duration while they still have a corpus in the bank.
So basically you're saying if I take that money that I receive from the term insurance plan, simply chuck it in a fixed deposit, the returns and the principal should enable my dependents to live until the age, for another 20, 30 years,
Absolutely.
for
For the
basically-
duration. Our
for the
calculator
duration.
factors in the
Correct.
duration
So if
that
I'm
we just
30
discussed.
and I bought a policy till 65 for the next 30, 35 years, because that is until when I would have been active and I would have
Absolutely.
provided for them. You're saying that money should account for this expense, right? Spread out over
the
30,
benchmark
35
that
years.
we've set, ki 50,000 is what my family needs on a monthly basis. We'll make sure
And
that
I shouldn't
that
go too
continues.
low and I shouldn't go too
shouldn't
high
go too low
because
or-
both
Absolutely.
are not optimized well enough. Got it.
Absolutely.
Okay, speaking of duration and cover, I have a problem with something that I believe that term insurance policy shouldn't do. That is simply push every add-on that is available, because that's an easy way for agents and insurance companies to make money. So they're like, add-on, this add-on, that add-on, buy everything,
Right.
and ultimately I end up paying for stuff that I may not need. So if there are some add-ons that I shouldn't buy, I think that's also a mistake that most people can avoid, right?
True. So there's one common add-on which I would avoid at all costs.
Right.
It's called return of premium.
Right.
It's where you essentially get back all your premiums at the end of the duration in
Right.
case nothing has happened.
Right.
Now this doesn't come free of cost.
Right.
Just to give you back your premiums, the insurer will now charge you 50-60% more.
Oh, okay. So you're saying if I'm paying 10,000 in premiums,
Right.
now I have to probably end up paying 15,000-16,000
Absolutely.
if I go for the return of premium option.
Yep.
Right.
And if nothing happens by the end of it, they'll give you 15-16,000 into that many years minus GST. They give it back.
But
to you.
I'll still get the money back, no, at the end.
You get just the principal amount. There's no interest or inflation adjusted.
Got
And
it.
we did the math. We looked at that extra 5,000-6,000. Assuming me as a customer, I have that money to spend.
Right.
What if I were to put that in an SIP for the same number of years?
Right.
Trust me, you'll come out on top, right? I think you recover the money you've spent on term insurance and you still make a handsome
So
profit
if I
there.
understand correctly, what you're basically saying is, instead of paying 16,000, I
Right.
pay 10,000,
Right.
I take the remaining 6,000 every year,
Yep.
and then I invest it in an SIP.
Yep.
You're saying I'll make more money from
You
that
will
as
make more
opposed
money
to...
on that. Absolutely. Because here it's not adjusted for even a percentage of interest, right? There's nothing at all here.
So that obviously doesn't make any monetary
That
sense.
doesn't make any monetary
Right.
sense.
But
at all.
are there any other add-ons outside of return of premiums?
I would say accidental benefit is, it's a bit of a subjective call, right?
Right.
So, look, accidental deaths are already covered in term insurance,
Right.
I think that's one of the most common questions I would get as an advisor, that why is there a separate add-on for accidental death benefit?
Correct.
Now, this is simply to give them a higher amount in case of an accidental death. So, not only will the base 1 crore be paid, they'll also pay 50 lakh over and above.
Got it.
Now, this might make sense if your profile is such that, look, you're hobbies are such that you're more prone to an accident, or
Right.
your job or lifestyle is such that you might be more prone to it.
Right.
But for agents to suggest it in every single policy or proposal, it really doesn't make
It
sense.
doesn't
right?
make sense.
It really
And
doesn't.
generally, I don't think people should worry about the mode of death, right?
Absolutely.
I mean, death is an uncomfortable topic as is. And I think if you are trying to cover yourself and your dependents, what you're trying to do is make sure that you're covered for all cases, not just accidental death. So, no,
Absolutely.
I agree. Maybe that's also not a particularly useful rider if you're accounting for all use cases. All right. Moving away from this, one of the common things that I've seen people do at Ditto, at least, is that the customers come to us, they take our advice, and then they don't take our help when they fill out the application, and they probably make a few mistakes that end up costing them dearly.
Right.
So, can you tell me some of the mistakes people make once they bought the policy and they're filling out the proposal or the application form?
True. So the proposal is quite comprehensive, right? It's at least, I would say, 10, 12 pages where they
Right.
ask you personal details, employment details,
Right.
your medical history, your family medical history as
Yeah.
well. Right? They ask you questions about whether your parents have any hereditary conditions. They even ask you about existing insurance policies.
Because of the money involved also,
Pretty
right?
much.
Yeah,
The
right.
kind of risk involved for them,
Right,
and
right.
the kind of risk they're covering.
Right.
So I think there, one of the common ones where people do miss out on is disclosing existing insurance details.
Oh, okay.
It could be a small LIC policy that your family or your dad purchased for you when you just started your career.
You're saying people forget this and they don't disclose that they already
Absolutely.
have a term
Yes.
insurance,
And-
or a
or
life insurance
or
policy.
anything.
Endowment policy,
Exactly.
basically.
And
Yeah.
this could really come back to bite you in the near future.
Why does that happen?
So this causes an issue because you're only allowed to buy a certain amount of insurance, which is decided based on your income, right? As we discussed earlier.
So you
now
have
you're
a cap on
technically-
cover.
You could be over-insuring yourself, and to them, that's a fraud, right? You have
So basically they're saying you're only eligible for 2 crores, but you lied to us
Yes.
because you already have 50 lakhs elsewhere, and now
Absolutely.
you're asking for 3 crores again, which would
which you're not
breach the
eligible
limit.
for. Absolutely.
Right. Okay.
So you might get away with it while filling the application, but
Right.
this could come back later, right? When you
Right.
go for a claim.
And what do? They'll reject your application, and will they not allow you to reapply again?
No, in case they do discover it while you're applying, then yes, they would either ask you to reduce your cover amount, saying that, hey, we found a 50 lakh cover out there
Got it.
through the insurance bureau or through our reinsurer or whatever.
Right.
So we'd ask you to reduce you're not eligible for the entire amount you're asking for, so please apply for a bit lesser.
So your use case you're describing is you filled out incorrect details. The policy has been issued. The insurer investigates thoroughly in the
Right.
next 2-3 years, which we've seen that they do consistently investigate existing customers. And in the course of these investigations, if they find something, you're saying the policy could be cancelled, or worse even, they may not have the chance to reapply again.
Absolutely. That is a possibility. The
Right.
insurer would now see you as a risky customer who has provided misinformation at an earlier point.
Right.
So the risk for them goes up
even if
drastically.
you were just being ignorant, right?
You were genuinely not aware of that plan.
Right. Speaking of application ke baad, there is only one thing left until the claims come through, which is medicals, right?
Absolutely.
Anything that you've seen people miss out when they're going through the medicals, or anything that people should be aware of when going through the medicals, because generally term insurance medicals are very comprehensive, right?
Absolutely.
Yeah.
I think there it's all about when you're buying the plan, right? Buying it in your as early as possible or when you're as young as possible would allow for a much higher chance of nothing coming up in those tests.
Got it.
Right? If you buy it at a later age, naturally with age, of course, I mean,
Right.
the human body is not built to last forever, right?
Yeah.
So you can have a slight blood sugar spike, you could have a slight cholesterol spike and so on.
Right.
So I think that could obviously cause an issue where
Got it.
once they discover those things, they're a bit skeptical about giving you the insurance.
Got it.
So they could either postpone your application, saying, why don't you get things in order and reapply 6 months later?
Right.
Or two, they could rate it up, saying that, look, you applied for 1 crore at 10,000 rupees, but we feel you should get the 1 crore at 15,000 or even 20,000 rupees.
Right.
And they want you to pay more than the average customer of the same profile.
Because of the health conditions or
Pretty
whatever,
much.
right? Yeah,
Yes.
yeah.
Now, in case you are faced with a postponement or even this counter offer, you could still choose whether you want to go ahead with this or do you want to take some time, work on your health, fix those conditions.
Correct. Yeah.
Right? It could even be something as simple as a lifestyle condition like a high BMI.
Right.
You could probably work on it a bit, try to reduce your weight, and then maybe reapply once you're in a reasonable range. there.
So you're basically saying that if I already know that I have high BMI, high cholesterol, my lipid profiles are probably out of range. If I have, maybe HbA1c levels that are slightly creeping upwards, that could be a problem. I can get these tests done myself before applying, and perhaps work on this because I could either save premiums or not, get postponements or direct rejections from the insurance companies. That's the premise.
Absolutely.
Right?
These are things that you could really work on.
Got it. Alright then, I think we've covered some of the biggest mistakes that people make when generally buying a term insurance policy. And like always, if you have more questions about what to do, what not to do when buying a term insurance policy or a health insurance policy, do not forget to check out Ditto. We have some of the best advisors in the company, as you can see right here. And also, because we can guide you on a contextual basis, make sure that we understand your profile, we see what your health conditions are, what your profile is, and then make sure that we make recommendations that are tuned specifically for you. So what are you waiting for? Click on the link in the description box below, book a free call at Ditto Insurance, and make sure that we take care of things instead of you managing everything, right? I promise you it's free of cost and you really enjoy it. And like always, leave a like on the video and subscribe to the channel if you haven't done it already, because a lot of you watch these videos but don't end up subscribing to the channel. And why do you do that? Please subscribe to the channel so that we are happy, you are happy, you get to know more about insurance, and you get to learn from people who have been in this industry, who've done it. And like always, I will see you again next video. Until then, happy insurance hunting.